Thank you guys so much for coming out today. Randy Leonhardt with Laraby Financial and Rory Gleeson with Global Mortgage. You guys are our favorites, by the way, mortgage partners that Energy Realty uses because you've been doing it a long time. You take care of our clients. We know on the other end when we're trying to get someone to the closing table that our buyers are going to be in good hands. But what a crazy start to the year. I am telling you, I was expecting to be, which we are, we're crazy busy. But from a listing perspective or seller perspective, homes are moving a lot slower, lots going on. So just kind of want to get from you guys. I'll start with you, Rory. Can you give me a quick overview of what you're seeing on the lending side? I'm saying from the listing side, we're seeing listings move a lot slower.
Right, quick might be difficult to do, but I suppose it's been so volatile, not only this year, but just in the last few years, right? We had like tariffs that created uncertainty last year. And then we have everything that's happening in the Middle East and Iran has created war uncertainty, which obviously has kind of caused changes in what's going on. As you said, like the market's still moving, but I think just people need a bit more reassurance of what's happening. I think that's the biggest thing. Yes, rates have moved a bit, but in the space of kind of, a month, 2 months, it hasn't moved enough for it to completely change the market. It's more, I think the uncertainty is, cause people to kind of rethink things or kind of change their plans, basically.
I'm going to throw out a little curveball there for you. We're sitting here in where 60% of our economy is still oil and gas, even though we say we've diversified in Houston. And hey, the war in Iran made prices go up, and we should be sitting heyday,
Yeah.
right?
Yeah.
Yeah. So why uncertainty? I mean, oil and gas companies shouldn't be uncertain right now. They should be going, we need to hire more people.
Yeah. Well, the assumption is that they're going to hire more. I suppose it's depending, do they think they're going to be hired up for long enough that they're going to spend on capital projects, bring more people in and stuff like that. That's what I've been told. I'm not an expert in oil and gas, right? But I think for me, it's yes, people don't know where they stand in the short term. Obviously, short term doesn't help us when we have listings on the market. You buyers looking actually for properties, and what we want to just give them is a bit of reassurance, a bit of education on what options they do have, and kind of come up with as well. For me, like definitely teach us medium to long term strategy and what they can do with their financials, so they're in a good position regardless of what happens in the market.
Yep.
And
I think he's right on the oil and gas. I don't think we're going to see a lot of money being spent on it because I think this is a short-term blip. All has to do with the war in Iran. Now, if that turns out to be a longer situation, yeah, that could change everything. I think at least for what we see in our analysts, they think the war in Iran is going to be a short-term deal. It's going to get straightened out. That oil production is going to get back to normalizing. So I would assume, and I'm not an oil and gas professional either, but I think they're not going to start investing thinking that, this may all change any really. The way things go now, it could change any day now. It could change any week.
Yeah. Well, as a real estate brokerage in the heart of the energy corridor, what I hear is we, at the end of 2025, oil and gas companies were laying off because the price per gallon had dropped below 60, so they were actually losing money. Now it shot up to 100. But there's what we're having, been doing this for 23 years. What I see typically is it takes about 6 to 12 months before we see the impact of those prices in the actual industry, and definitely in the housing market. We're not going to see it affect the housing market. So let me, I'm going to start with Randy this time. From your perspective, how would you describe today's real estate market in 1 or 2 words? This is from the words of a lens.
Topsy-turvy.
Topsy-turvy. Very good. I heard bipolar.
That's 1 or 2 words.
I've heard bipolar.
Oh, bipolar's a good one.
Yeah.
We're seeing, I have partners that have listings that have been on the market for over a year. Then I've also got clients out there that are getting outbid every weekend with multiple offers. So we've got everything out there right now.
Yeah.
I do think this is a great opportunity for people that do want to buy now, because I think when everything calms down, we see rates come down a little bit, I think prices aren't going to do anything but go up.
Yeah.
So I think really with last quarter and this quarter being slower, I think this is a great opportunity to buy, because I think we're going to look back in 5 years and be like, ooh, I should have bought then. These prices have really gone up.
The key word is opportunity. Real estate market is just like in the stock market. It's all about timing, right? You buy when it's on the low. So based on where we've had the past 3 year trajectory, if I could say that word, has been kind of heading downwards. It's been more of a buyer's market. Buyers should be able to capture that low end, lock in and buy. What do we call it? Date the rate, marry the house.
Yep.
Yes, that's what we want them to do. Let's get them to marry that house, and they can always date that rate later. So, what's your what's your take on it?
I think you kind of nailed on that similar, is it? But it's just been, yeah, like it's roller coaster in terms of how the last few years in the industry. But like, I'll give you a good anecdote for like, and you may know this, like 2021, there was like 320,000 licensed LOs in the country. And that number last year of people who renewed their licenses was 80,000. So you've lost 2/3 of the industry in the lending industry.
Yeah.
Just because it has been that such a roller coaster of a few years of what's happened. So
Yeah.
I think really
So only the good ones survive.
only the top one survives, like two. Yeah. Well, yes, yeah, I think that's been it for me. I've kind of just pushed more and more towards just trying to educate buyers better, get them to be aware of the numbers, that we're not stretching their budgets too much as well. I think that's one thing I've seen of like a client even for a $900,000 house, instead of buying a $900,000 house, they might buy a 700 to just be a bit more conservative, manage their money a bit more, maybe shorten their term, pay the loan off a bit quicker as well. And I think that's been, from what I've seen, just kind of maybe a more educated, kind of more conservative type of buyer who is buying properly at the loan.
Yeah.
Again, to finance.
Yeah.
I agree with that. I think from where we were in 2021, a lot of people bought for opportunity.
Yeah.
And it was just the right time to buy when those
Yeah.
rates were unbelievable, unmatchable low rates. Now you've got people who are thinking about the market, timing it, getting educated, and they're knowing a little bit more about what they're doing going into it, as opposed to just, hey, I was told it's the best time to buy a house.
Yeah. Take a punt.
Yeah.
See what happens there. Yeah.
Yeah, but in 2021, those buyers were having to compete with multiple offers on everything. Anything out the gate had multiple offers. So,
And it was priced up too.
they were paying $100,000 above the list price, so it was becoming way more competitive. It was not a buyer's advantage. So today, quick check on the internet, we're seeing with months of inventory of about, on average across Houston, it's going to vary per market, is about 4.7 months. Same time last year was about half, 0.4, 0.2, 4.3. So inventory levels are creeping up. That means, what does inventory level mean? More opportunity.
More opportunity.
For buyers, right? So from your perspective on the lending, those opportunities are out there for the buyers. They just have to, it might not be that house that's perfectly mim and ready. But so how the interest rates, let's put it in perspective for people out there. And of course, my watch me will have to.
Yeah, that's so professional. Can't believe.
I had to turn that volume on.
Okay, so how does obviously
Yeah, just say, like, let's just talk about, let's put in perspective for all the
for sure.
followers out there.
So I was doing a presentation last week and actually just did like a charge to show the realtors. Okay, we had rates right there, I think 3-year low, sorry, like at the end of February, start of March. Rand war, it's things rocket up to 6.65 on average. That's dropped down to about 6.3. So you're talking 0.3% higher than like the 3-year lows. What difference is that? Like I used an example when I was talking to the group, like a $500,000 loan. That's a difference of like $83 a month. Not that much. $1 million loan, that's $174, and $1 million loan. So perspective wise, it's not that much more. When you play with the fact that you can negotiate massive seller contributions, roof repairs, whatever's going to happen, that's going to make a bigger difference in your monthly payments as opposed to waiting for it to tick slightly more down on the interest rates. As you said, opportunity is the key there, and recognizing it.
Yeah, figure out how you're going to maneuver through it. Randy, how does that interest rates today, this same time last year, where were we?
They were up. They were about a half point lower now than they were a year ago. So things are going the right direction. But back to what you were saying, yeah, you might spend a little bit more money now, but if we wait and see these rates fall, you might spend an extra 10 grand, 20 grand on the house, what comes ahead. And as you said, date the rate. We can always redo that mortgage. If you know what, you can never redo that sales price.
Yeah.
So when we are seeing, now that things are sitting on the market, we have seen some opportunity with some seller concession coming in. We really hadn't seen that in a while. I'm not saying on all of them, but that seller is a little more motivated now to help you on that house.
Yeah. Well, one of the things that I'm big on is that we do this every day. We can talk lingo. We know what we're talking about. Sometimes I think I feel bad because, people that aren't buying and selling houses or doing loans every day, they have no idea what we're talking about. But a big opportunity out there when we are trying to look at being a little bit more creative on how we can help the buyers get into the house. Let's say we can say $85, $150 a month is not that big a deal, but maybe to some people it is, right? Well, it's like, of course, might be something else that they have to cut in order to do that. You've got healthcare, you've got kids, cost of groceries have gone up, all those things. Buy down. If you're going to get a seller's contribution, what does it explain? And all, I think I've been starting with Rory, so I'm going to start with Randy to
Perfect.
explain what a buy down is and how that could really help buyers kind of be a little bit more creative in today's market.
Of course. So they're basically the buy down is just getting a lower interest rate. And there's two things you can do. We can do a permanent buy down where you take that rate and you buy it from, let's say, 6.5 down to 6. You have a lower payment for the life of the loan. We also have what's called a 2-1 buy down. And there's a 1-0 buy down. So there's variations of it. But those are temporary buy downs. They're a little bit cheaper. So it gets you a lower rate. Let's on the 2-1, it gives you a lower rate this year, a lower rate next year. And then you get to the market rate on the third year. It's fixed. We know exactly where it's going. So you have 2 years to really get to where today's market is. So that does help out. If you have seller contribution, instead of taking a lower price, a lot of times you get a lower payment by keeping the price the same and buying down that rate, whether it be permanent or temporary buy down.
Got it. Rory, what are some other ways that you're kind of helping some of your clients be a little bit creative in financing today?
Creative financing. I think one thing I've just helped a lot is like the buy down obviously is a fantastic thing for affordability, right? I think I've helped a lot of people that have bought in the last few years when rates were, in the 7s, for example, and just giving them options to get their principal paid off quicker, I think, as well. I think for me, it's been a big thing of like, okay, well, what are your goals that you want to do with this house? Do you want to just keep it as low as possible? Do you want to get paid off quickly and kind of build equity quickly? So we've helped a lot of people look at like 15-year loans and 20-year loans, refinance into those if they're comfortable with the payments, but they want to get the house to build, paid off quickly and build the equity in the house. So I think that's been the big thing when you're talking about just getting creative on getting it, and being responsible with your money and making good use.
So realistically, easy to do when someone has the the funds, the income to do that easily, where they can say, you can make the decision, let's do a 15-year mortgage versus a 30-year mortgage. Well, let's face it, the average American doesn't live that way. Right. So that's going to be your international buyer, which we have a lot of. 30% of our buyers in Houston are international, but your average buyer might not be able to do that. So I've always advised, and I might be wrong, but I'm just throwing this out there because I have curveballs. Do the 30-year mortgage versus the 15, because then you're more flexible. You can choose to pay down your
as well. I think
pay down the mortgage faster, but you don't have to. Like if you run into a month where you're going, oh, it's a little tighter this month, I got to replace all the tires in the car. Someone just got sick in the family. Things happen, life happens. So where they've got flexibility, what's your go? Do you advise the 15-year mortgage, or now what Trump's trying to do, a 40-year or 50-year mortgage? I mean, like, let's just do lifetime.
Yeah.
100-year.
One thing, sorry, to add into that, like, is one kind of false belief a lot of people have is that you need that 20% to buy a house, right? So one thing we can say is educate people is like, as a first-time home buyer on a conventional, you can put 3% down as a minimum. For FHA is 3.5%. So I think as well, as you said, if you want to have people have a lot of life costs, growing families, whatever's happening, you can educate them, say, hey, put less down right now, and then you have the option. Like, I think in the US has such a great flexibility with all the loan products that you could pay $100, $2,000, $5,000, $10,000 extra a month on the principal if you do want it down the line as well. So we just kind of educate people like 3% is the minimum you need, and that gives them a lot of flexibility down the line. Yeah.
Sounds good. Anything you want to add to that, Randy?
Well,
Going back and forth between the two.
I do agree with them. A lot of people don't realize you don't have to put much down. And really, in a house, especially in Houston, we don't have crazy appreciation, but we have continuous appreciation just about every year. So really, where your wealth is built is getting into that house, getting off the rent, and you secure that house, and from there on out, you're getting equity that's being built every year on the house. So that's really where the quicker you get started on that, the more you build up, then you go on to your next house. You have more equity in that house for down payment on your next house. That's really where the stair step happens.
Yeah. So let's put a little bit more perspective because, we're obviously, you guys are still doing loans. We're talking about the market is slower, but people are still doing loans. People are still buying houses. Some cases we're seeing multiple offers. In some cases we're seeing houses sit on the market forever, right? It's going to be, what is the right price that the house is going to sell? So then you have your first time home buyer. And I went to a restaurant in San Antonio a few weeks ago. I can't remember what I was there for. I think it was my dad's birthday. And just hearing the perspective from people there, guy server, just commenting, yeah, business is really slower. Cost of everything went up. Well, we can say, is it really the interest rates that's stopping buyers from buying, right? Or is it that, hey, I got to think about, is this a time to buy if I'm looking at the cost of gas went up? Well, and gas companies are, hooray, yay, go on gas. But the consumer who has to pay for that, the gas pump, is not happy about it. And at the same time, when gas prices go up, all goods go up, right? Your cost of shipping them, getting them in, or all of that's going up. So what are some ways around that? Do you guys have some, and I'll start with you this time, Rory, what's some advice for that first-time home buyer?
I think as well, it's knowing the benefits of owning a house, like tax-wise as well, income-wise, how it affects it, because obviously you rent a house or you rent an apartment, everything goes towards the rent. There's no benefits you're reaping really from it. Everything, all the mortgage interest that you pay on your primary residence is tax deductible. So kind of remind the clients of that. That's a massive benefit. Up to $10,000 a year, property tax or tax deductible as well for your clients. So I think just kind of showing them, on their overall yearly finances, okay, well, if you bought versus rent, kind of what benefits were you reaping? I think that's kind of another thing to keep in mind.
Yeah.
Can help.
But what are some ways that they can prepare, right? Because it's scary. You're going to buy your first house and I got money to save. How much money do I need to save? What are some ways that I can do this? How do I step into home ownership for the first time?
Talk to your landlord.
Yeah, I was going to say, I feel like we've really changed the last few years into this. We are having educated buyers. We're having people call us, and we actually take them all the way through the process. Like they have a contract, we get their documentation, a pay stub, their W-2. We do a preliminary loan application. We get them through underwriting. So they've been approved, and they're as close to paying cash as possible. So all they need to do is find a property. But at the same time, we give them the different levels. We give them the level where they think they want their payment to be, how high we can get their payment. And a lot of times they're not comfortable with that.
Yeah.
So, and then as we work on those different payments, we also show them what it looks like for money out of pocket. So when they do find that house, they're fully educated. If they're looking in this neighborhood, the payment's going to be in this range. I need this much out of pocket. But also, if we find this house, we can still do it. But these are the parameters for that one.
What is the money out of pocket that for some first-time home buyers, that's the biggest obstacle that they have to overcome? Let's just take, what's the average price that a first-time home buyer is going to pay? What's realistic? What are you seeing?
That's all over the board.
Is it? Well, because you can't. I mean, like I could say you're not going to get a house in Houston unless you want to be way out in the middle of nowhere or a townhouse for less than say 300. Something decent. You're looking at 300,000.
I've got clients right now, and you are having to go out, but that's their price range. I've got some that are in the 200,000 range, believe it or not.
Mm-hmm.
And that was the first part of that education is me talking to them too, that they can afford it. They make the money to do it, and they have the funds to do it. We worked out those different parameters for them. Now they did have to go to a further, they're not in the middle of Houston. They did have to go out a little bit, but
yeah,
that's what they wanted. And they can do that. Then like we all have different clients. I've got some first time home buyers that feel like they can't buy anything, and they buy in the Heights for $800,000. It's all different.
There's a big difference, but so 200,000. So I'm going to say, let's say average 300,000 first time home buyer average. You want to be somewhere where your commute to work is not going to be an hour and a half. So you buy a $300,000 house. What's best case scenario of what they would need in order to get into a house? How much cash do they need?
Oh, geez, that's all. Okay, first time home buyer, you're talking minimum of 3% down, right? So double 9,000 out away. what would you say for like closing costs? You got to factor in. You've got like your notary or your title fees, your taxes, your like escrow reserves.
I use 10. I'm going to go with 10.
Yeah, I think good. Yeah, 10's a good example. So
So under 20 grand, you're,
yeah, then it has.
So you need 20 grand.
but hold on.
Creative ways.
That's
to-
not true. So your down payment has to come from your side. Now, it doesn't even have to come from you. It can come from a gift. If you have a family member that wants to help out, they can give you your full down payment. We can also negotiate the contract where the seller pays your closing costs, your prepaids. So on that 3% down, on a $300,000 purchase, we can get $9,000 towards your closing costs, your prepaids. So basically,
So they could reasonably get into a house if you get the prepaids paid by the seller. Then you could get into the house for $10,000.
Yep. Yep.
$300,000 property you can get in my house for about $10,000.
Yep.
Tend to treat my first-time home buyers a little bit like they're my children. So I might say, but make sure you have some money in the bank.
sure.
Because it just kills me if I don't want to see someone get into buying a house and then find, something breaks and they don't have the money to do it. Anticipate the unknowns, just like owning a car. You got to have, now there's a requirement, they have to have reserves in the bank as well on that qualification. Is that?
Not necessarily. It depends on when you run the loan through underwriting. It always helps to have reserves, right? As a rule of thumb, always good to have reserves. A lot of times, like people put like a rule of thumb, 6 months reserves for housing expenses. It definitely always helps to have it,
That
Yeah.
most of our underwriting now, if you have good credit, we don't have to have any reserves.
Yeah.
That's just to get into underwriting. But yes, we all agree. We'd like to see your client have a couple months of reserves after closing. But at the same time, we could do the home warranty. So your major repairs will be covered at least the first year.
Yeah.
So there's things we do to minimize what your downside could be.
Yeah. But we realistically know as realtors that home warranty doesn't cover a lot. Best case scenario is you have brand new construction, everything's covered under warranty for
Sure.
sure. If you're going to buy your first home, but if you're buying in, closer to work, it might be older, and the home warranty has what's called pre-existing conditions. There will always be a battle. The home warranties we don't want to tell someone that you're going to always be covered with that. So have some money in reserves.
For sure.
So that brings me to this question. What buyer segments, now I'll kind of go back to Brandon and back to you, are you seeing more active in the market in regard to who's applying for the mortgages? I see them once they buy the house. You see these people, the activity when they're actually applying for the mortgage.
So right now, I've been telling people it's really our core business. The business that's been there forever and will always be there. It's your first-time home buyer. It's your family that's had another child, needs more space. It's your people moving to town. So for the most part, a lot of people out there have a locked-in interest rate at a low rate. They're not really as motivated to move. They're going to be eventually, you got to move, but right now it's the backbone of the business. The people that have or need a house and don't really have the ability to say, I'll wait. I can stay where I am. Maybe they need to move out from their parents. New home formations, things like that. So that's the bulk of our business right now. We do have some move ups.
Mm-hmm.
There's two things that are slow on right now. We usually have our move ups, but again, those people are locked in on a low interest rate from a few years ago. And then we also have our retirees, which are a big part of our business. They're empty nesters and they usually move down. The same thing. They have such a great rate now. They move down. They're not saving that much money or any at all.
Yeah.
So,
but those are the baby boomers. Lots of articles have been coming out that your baby boomer is your biggest buyer and seller for the last 2 years. And I look at that because
they should be
probably
bigger.
they lived in their houses for the last 30 years.
Yeah.
God, woman, who does that today? But I think that's for the mortgage industry that people don't live in homes for 30 years anymore. And their homes are paid off. So that's not helping you guys up, because what I see is those baby boomers often can sell the house. They've got cash and then go buy something in cash. So I don't see, at least from my perspective, I'm not seeing where those are really helping on the lending side.
What helps us on that is, literally we need that house on the market.
Yeah.
If more houses on the market, bring more people to the market. So
I'm seeing more houses on the market. So we're definitely listing houses. Just this last 30 days, there's just been an incredible increase in inventory. I would say our inventory's increased by 20%, which is normal because it's the spring market, and that's when most sellers have been preparing to put their homes on the market.
Yeah.
We just got to get the buyers in them. So that's where I need your help. Get those buyers in there.
One thing is, I just thought you were saying about different segments of the market coming into buy, and I think obviously why companies go with Warriors, right? We deal a lot with international clients, so 30% of the city is born abroad. So I think like there's a massive, and always has been and will be, I think, a massive international influx and influence in Houston. So a lot of people still are relocating to Houston. So that's still a big part of the market here. I've also actually, I don't know about you, but I've seen a lot of stuff happening with self-employed clients. So there's a lot more loan products back in the market now, more creative, non-conventional loan products for self-employed clients, people asset rich as well and asset wealthy. So I think what's been really good in the lending industry is a lot more programs available for your non-conventional borrowers as well. And that's really helped us. I think it's been great because self-employed clients, a lot of them can earn great money, but they aren't an easy file to do paperwork wise. And that's been great. Like we've helped a lot of self-employed clients a lot in the last years.
Those non-conventional types they've really filled in the last couple of years. You're probably 30 to 40% of our business right now.
Really?
Yeah.
The non-conventional, who are the non-conventional realtors?
Well,
Because we know it's a good time to buy.
Yeah.
Exactly.
Yeah. Yeah, well, I see an opportunity. I'm going to go buy that. Yeah. Okay. Who are other self-employed dentists, maybe?
Yeah, I'm
Business owners?
Yeah, self-employed professionals, white collar jobs. A lot of people working in industry as well. I think there's some people that like have great income, great revenue and stuff in terms of industry. But I think, yeah, self-employed is kind of across the board, really. It's not, I've seen anyway from my side, like I think there's been a bit of, from every background that's been to do a lot of business as well.
We have that opportunity under taxes to write things off, and that always doesn't equate to getting the air improved. So we have folks in all industries. I did a baker not long ago. I was kind of surprised how well the baker did.
The baker, the candlestick maker?
No candlestick maker yet. But yeah, they have income, but it just doesn't flow through the tax returns. But there's great loans out there for them now.
Yeah.
We've got some great loans for people that are investors. They're not going to move in the house. They're buying it for an investment opportunity.
That was going to be my next question is what about the investors? Because I think it's almost, and there, I can't remember where I saw the article where we've actually had a bad reputation where a lot of investors are buying up the houses. Are you seeing what percentage of your business are investors?
Ours is still a low percentage, probably less than 20.
Okay. And you?
Probably more to 30%, I think.
30%. And are those investors that are renting the houses or the investors that are flipping?
Renting houses.
Okay. Yeah. So there you go. They're using this opportunity to have rental properties. Okay.
Yeah. Guys,
that's good to know.
Most of them come in 25 at least to 30% down on the properties just to get the margins right. But yeah.
I'm gonna circle back on the relocation or the foreign buyer, since you kind of tapped on that, because a lot of what we do, we're in the energy sector.
Yep.
They are the relocation buyers. So what is that loan process like? Can you do a quick summary of if you don't have U.S. credit history, you arrive here? Because when I started, selling real estate in Houston 23 years ago, kind of seems like a long time ago now, there was a perception that you couldn't get a loan without U.S. credit history. And there were lots of loan opportunities even then. And big banks were still doing it because these people were coming in with oil and gas a lot, not always. And they had good jobs. So they had and they had down payments. They had money to put down. So give me a quick summary of that process.
Yeah. So there's under the international side, you have two different profiles of client. The one that you were kind of into that is someone who comes over on a work visa for, either transfer to work, generally speaking. So they have the work visa, they got on their social security, they have a great job, as you said, like they're responsible in where they're moving from, have plenty of savings, and they're responsible with their finances, but they don't have the credit score. So, we have products that will use the credit history from their home country where they're coming from in order to supplement not having a US credit score, because, if someone comes over that they know they want to buy, they want to settle down with the family or with their partner, they don't want to rent maybe for 6 to 12 months. So we can help them get immediately into the house and go to minimum of 10% down. But like those products can be done. The biggest thing is just being organized ahead of time, because you're dealing with foreign documents,
Don't put them on a shipment. Don't put all your files on.
Yeah,
the
don't get on the
shipment.
container. I know, yeah, I
Yeah.
know. Well, I think for me as well, like I've learned through experience in this is like working with the right teams that know how to prepare and work with those types of documents because they're more complicated. Working with the right underwriters in the bank as well. And so those are great products and obviously so handy for the Houston area and Texas area. And then you have the foreign national investor who is your buyer who wants to buy investment properties but doesn't live in the US, doesn't want to live in the US. And in that perspective, I think the most straightforward is for people to create like an LLC, get their tax identification or their EIN, their tax number with the LLC, open up a bank account in the US, and we can basically do what's called a DSCR loan, where instead of going and analyzing someone's personal income, we analyze the rent.
I should have turned this up. Sorry, keep going.
You're good. So with a DSCR loan, instead of analyzing what someone's personal income, you analyze the rental income for the house. So if the potential rental income for the house at least covers the monthly cost of the house, they qualify for the loan. So it's actually quite a straightforward.
Are you seeing a lot of bills right now?
Yeah.
Really?
Last 2 years been
Okay.
very busy. Yeah.
Yeah, because
They were a popular product for sure.
Yeah.
one, I'm kind of curious because as the home prices went up, the rate of return for those rental investment properties is a lot harder to find. There aren't as many because your cost of if the interest rate went up, the monthly payment is higher, your taxes went up, and also your insurance. So, where we used to be able to say, I think the average investor when I started in this industry wanted to see a 1%. Like you, and I'll just use that number, 500,000. You're renting it for 5,000. You're not renting a $500,000 house for $5,000 a month. That's not what we're seeing. But
Yeah.
so interesting. And what percentage are investors on your portfolio?
Like in terms of total client base, I'd say about 30%.
30%.
I think so.
That's pretty high.
It's pretty good. Like, and again, I did a lot of the address, so investors plus people buying the first rental property. Well, I think like that when the margins are not as thick as maybe or as wide as they were before. I think just people are putting more down to get like people are kind of coming in with quite a lot of assets behind them. So maybe before with 25% down, they would have been okay. They're putting 30 to 40% down. To cover the cost. That's what I've said.
Historically, I know we've had some buyers that would go out and find investment property. Now it's more someone has a business plan. We're not seeing that family that says, "Hey, let's do this," because you're right. It's the return's not as good as they used to be.
Yeah.
And the returns right now is in the appreciation of the house. That's really what you got to wait for.
Well, we say if your renters are paying for you to own the house,
Yeah.
it's a win. Yeah.
It is hard to get the break even now. Like used to it was a lot easier, but yeah. So it seems like we've got more people doing the DSCR type loan. It's more specific for investors. I say historically you'd have someone every once in a while, hey, we owe a extra money, let's buy an investment property. It's not as often anymore.
Yep. Definitely have those clients. Well, I think we're getting ready to have a wrap. So we finished about 30 minutes here. So I'm going to say, let's close this out and say, I'm going to start with you this time to finish up. What advice would you give buyers that are waiting on the sidelines?
I guess what we've been saying is where things are going. Anytime I talk to someone who's thinking about buying, I put them through the whole process. We don't say what ifs. When we start off, we'll let them know, hey, what's it going to look like. If that all looks good, we put them through the process. I've got one right now. We got a contract today. The sellers needed to sell fast, so we're closing in 15 days. I can't do that if I don't have them straight up front. Yeah. So the buyer's more educated going into looking at houses. They know what their price range is, and we can move as quick as cash can a lot of times. And they're as strong as a cash buyer, as strong as they can be as a cash buyer without having the cash. So really, my strategy right now is once you start looking, let's go ahead and do all the heavy lifting up front, and then you just have to decide on the house.
Dad?
Yeah.
You?
No, I think rounding out education, knowing where your numbers are, and I think once people have an idea and perspective where they stand, they kind of get on board pretty quickly in general. So, yeah.
And my last bit of advice is don't hire your lender, just like you don't hire your realtor based on online.
Information.
Hire someone local that can talk to you, advise you, hold your hand through the process. So thank you guys for being here.
Sure. Sherry, thank you.
Thank you.